Good afternoon, everyone. My name is Cynthia Jaramillo, and I serve as the Chief Growth and Partnerships Officer here at the United States Hispanic Chamber of Commerce. On behalf of our team, our Board of Directors, I'd like to welcome you to today's webinar, Funding Growth and Innovation, Financial Strategies for Business Expansion, proudly presented in partnership with our longtime partner, Nationwide. Before we get started, I'd like to share that at the United States Hispanic Chamber of Commerce, we understand that securing funding for business expansion and innovative projects can be challenging. Today's session will explore key financial strategies to support your goals. We'll also discuss how life insurance can be a strategic tool to help you safeguard and strengthen your business. I'm honored to be joined by an exceptional panel of experts who bring decades of combined experience in business finance, investment strategy, and advanced planning. Their insights will really help us better understand the tools and approaches available to business owners who are seeking to expand, who are seeking to innovate and protect your business enterprises. Also want to mention to feel free to drop your questions into the Q&A chat throughout the session. We'll save time at the end of the webinar for Q&A, and we'll do our best to address as many questions as we can. And with that, I would like to invite our panelists to introduce themselves and set the stage. And I will start with Paul.
Thank you, Cynthia. Hello, everyone. My name is Paul Roldan. I am a financial advisor and founding partner and principal here at Allgen Financial Advisors. We're a registered investment advisor, headquartered in Orlando, Florida, originally from New York, of Cuban and Puerto Rican descent. My parents made the leap from New York City to a little warmer Orlando, Florida several years ago, and have been helping people and small businesses and individuals do financial planning to take their finances to the next level for the last few decades. So excited and honored to be here. Thank you.
Thank you, Paul. I will pass it to Nick.
Thanks, Cynthia. Good afternoon, everyone. My name is Nick Delgado. I'm in Los Angeles, and I'm with Avon Ventures. We work with lower middle market companies. So that's companies that have anywhere between $500,000 to $3 million in EBITDA. What we do is we help them improve the value of their business. And we do that by helping them raise capital and then work with them to strategically deploy it.
Awesome. Thank you, Nick. Dee Dee.
Hey everyone, good afternoon. Dee Dee Chatwick. I have been in the retirement planning industry for a little over 22 years. I lead a team within Nationwide Financial that is comprised of both qualified and non-qualified retirement planning attorneys. We spend our time consulting and partnering with financial professionals and business owners to help them solve complex retirement planning and business succession challenges. So thanks for having me.
Thank you so much. Well, with that, let's get started with today's conversation. And I think we'll start with the big picture. And before I ask the first question of our panelists, I just want to mention that in the construction sector in particular, we've worked with many small business owners who operate on razor-thin margins and rely heavily on subcontracting. And one of the biggest blind spots is not forecasting for delayed payments, especially when dealing with government or large corporate contracts. Now, this lack of cash flow planning often prevents them from taking on larger jobs or scaling their teams when the demand is there. So my question for you is, what are the most overlooked financial blind spots that hold small businesses back from scaling? And how can owners start to shift their mindset toward that long-term growth? And I think I'll kick it to Dee Dee.
Yeah, thanks, Cynthia. So that scenario is obviously very common. And I think just fundamentally, the easiest thing that business owners can do is take time away from the business as an owner, right? So business owners wear so many hats, one of which is an owner, the other is an operator in terms of operating the day-to-day tasks of the business. So stepping away from operating to think about long-term strategy is really hard. And I think it's a fair challenge, right? They're really good at running their businesses, but they may not be experts in other kinds of things that are going to be a catalyst for growth. So my advice would be, you know, look for ways to bring in other third-party professionals who are experts and who do those kinds of things every day. And that would free a business owner up to kind of focus on their business, as much as possible, but still carving out some time to leverage the expertise of somebody else that's really going to propel them into their future.
No, absolutely. Paul, any insights to share?
Sorry, realized I was on mute. Thank you. And I want to echo what Dee Dee said and dissect your question into twofold that it was. It was, what are some financial blind spots and how can we, shift to long-term growth? Some financial blind spots I've seen is a lack of a true understanding of financial statements, metrics, the financial synergies of your business. A lot of I'm an entrepreneur. I happen to be in the financial world, but I've seen so many entrepreneurs who get excited. They have great concepts. They have that energy necessary to launch it and go. But at the end of the day, growth sometimes requires a basic understanding, which we're going to get into more later when we talk about funding, of financial metrics and what is a balance sheet, how does it work, and profit and loss, and how do you manage that? So not that you have to become an economist or a finance major, but you have to really have a good, decent grasp of the mechanics of your business and the finances that make it tick, right? So that's one of the blind spots I've seen, that people don't really focus on that enough. To echo Dee Dee's comment, there's a book I recommend called The E-Myth. The E-Myth Revisited by Michael Gerber. He talks about exactly what Dee Dee said, which is people get caught up in working in our business and don't take enough time to work on our business. Okay, and working on our business, taking a step back and say, okay, what are the different elements that make this business work and what requires my attention? So I highly recommend that book to be able to really start thinking and differentiating. Like, one example I hear people say, oh, I got to spend this much money. Well, yes, but is it an expenditure or is it an investment in the business? And what's the difference? Sometimes we think everything's an expense. Well, that's a sunk cost. But if something's going to bring me money back, there's an ROI to that. Again, getting to understand the financial metrics. I need to be able to differentiate between those dynamics for long-term growth.
Absolutely. Nick, anything to add?
Yeah, let's get super tactical about scaling with other people's money, because that's obviously a major theme in today's conversation. And so I think a big part of that is thinking about, what do funders look for and what is the job of a funder? And when you examine things from a funder standpoint, one of the things that's often overlooked by operators is the importance of tax returns and the quality of the tax return. One of the things that's interesting is, at the end of the year, when we sit with our tax counsel, there may be some situations where we want to tax optimize, meaning we want to lower our tax bill. And what that actually does is it reflects a lower level of profitability. So from a tax optimization standpoint, all good in that I lowered my tax bill a few bucks. But at the same time, we're actually introducing risk by not having quality tax returns that fully reconcile with that QuickBooks P&L, right? So we're gaming taxes in some ways, and it has major ramifications when it comes to funding, because funders are using the tax return, not your QuickBooks self-reported P&L, as the basis for their funding decisions. So it's something that I see very often, the tax optimization actually getting in the way of really high quality funding conversations that are based on tax returns.
Yeah, not as exciting of a topic, but incredibly important, and perfect segue to the next question. In your experience working with entrepreneurs, what separates businesses that successfully secure funding from those that struggle to get capital in the door? And I'll start with Paul.
Okay, great. And a good segue because, as Nick was saying, the power of tax. Oh my God, it's taxes. How boring is that, right? And I actually get excited. I am a tax specialist in my office, but what separates is really a good understanding, two things, a good understanding of the mechanics of your business, okay, especially on the financial side, and taxes is one of them, the role that that plays in your cash projections, et cetera. So taxes is a piece of your financial statements and your financial forecast. So a good understanding of the mechanics that push your business forward. But then number two, on a real practical level, the ability to present that well to a potential funder or investor. Okay, you have to, one, understand it, and two, present it in a manner that makes sense, that's rational, that can get buy-in. So it's interesting because one is very quantitative and one is a little bit more qualitative. Can I take all this knowledge that I have of my business, of my industry, and put in a format that is palatable, and not just palatable, but exciting to the audience that I'll be presenting for funding?
Absolutely. Nick, would you like to share some insights?
Yeah, I want to build on what Paul just said in terms of a narrative, right? I think successful entrepreneurs, they really know how to craft a compelling story and they don't just report the news. Reporting the news is handing over the checklist, giving the last 3 years of those tax returns, giving your balance sheet, answering the questionnaire. Successful entrepreneurs that get dollars, what they do is they craft a story. And in every great story, there's generally a hero who's facing some challenge and they meet a guide, and that guide has a plan. And the hero then has to make a choice in terms of failure and success. And when they follow the guide's plan, they arrive in a happy place, right? And I think what's interesting about successful entrepreneurs is when you study their stories, the entrepreneurs that get funded are not the hero, they're the guide. And the hero is your client. So when you can tell the story about your client to your funder, where you are the hero, and that syncs up with the financials, now you get the heads nodding from funders to say, not only do I understand it financially, but I like it. I have an emotional engagement with the story and the protagonist and all the different characters and players and industries that are going on here.
No, absolutely. Dee Dee.
Yeah, I would just piggyback on what Nick was saying. Like, in addition to being able to tell a great story and tell their story really well, I think small business owners and entrepreneurs, they need to be very relational. And I would say there are two people that they want to build really good relationships with. One is their local banker. So telling their story well and developing a really strong and meaningful relationship with that person, that guy or girl, can really move the needle. I mean, that person can be a really good resource. Not only do they have access to cash, but they also are privy to other advanced planning strategies that can be implemented to help growth. And then number two, I think is so overlooked, is just simply finding a mentor in your industry. Like, who are peers in your industry? Those guys and girls have been very successful in terms of accessing cash and securing funding, and they can provide really valuable insights and guidance. So, be besties with your banker and then look for somebody else who's a peer in your industry that you can rely on to really help you navigate some of that stuff.
Yeah, no, absolutely. Thank you for sharing your insights. This really reminds me of, I mean, we saw this, this with a small professional service firm in our network that specializes in engineering. They had a strong client work, but couldn't access capital because their business plan hadn't been updated in years and their financials weren't investor ready. And once they invested time, into aligning their growth story, told their growth story, with their numbers, we had a corporate partner who came in with a game-changing opportunity for this small business, so that storytelling is critical to align with their numbers, in order to, whether you're looking for capital or trying to secure a contract with a corporation or even the federal government. which leads me to the conversation around access to capital and investor readiness. And so my next question is, when pitching to lenders or investors, what financial signals or narratives tend to really spark interest? And what are some red flags that you might share that might turn a potential investor away? And I'll start with Nick.
Yeah. What's interesting is funders and capital providers, they get spooked by shadows. And one of the biggest shadow producers in a company is customer concentration. So if you look at your revenue and your revenue comes with more than 15% of your revenue comes from one source, that's going to create a shadow and that's going to start freaking them out. Or when you think about the distribution of your client base and what industries that they're in, and if you have an industry that's greater than 50%, that's a shadow and that's going to freak them out. So you have to be aware of that. But what's interesting, it doesn't just end there because there's another side to the concentration coin. What's interesting about funders is that while they don't want you to have customer concentration or industry concentration, rightfully so, because that poses risk, right? They themselves have a tendency of investing in the same industries and categories, right? And so, Cynthia, you mentioned a great case study in a professional services firm. That's an asset-light business, right? They likely don't have office buildings and trucks and equipment and machinery. So if we go to a traditional commercial banker who wants to fund based on collateral, that asset-light professional services firm may not be a good fit. But the good news is there are funders that have great track records working with asset-light companies. And so part of this is really knowing, where your shadows lie and also understanding the marketplace of different funders and understanding where they have concentrations. You want to lean in a positive way, lean into funders' concentrations, because that means they have a track record of funding companies that look and smell like you. And that's a critical key to success.
No, absolutely. Paul, any signals or narratives that that you've seen along your journey that you might share, or any red flags?
Well, yes, and to bringing this back to what people have been saying, what we've been saying all along, Nick and Didi, is if one, you need to know who you're pitching to, which is what Nick was just saying. Is this a private equity investor or is this a traditional bank, et cetera? Because banks want a little bit more boring, perhaps. Okay, they want the traditional, years of history, et cetera. Someone who is maybe an angel investor maybe lives on the edge a little more, and they might be willing to take a little bit more risk. So your presentation has to be catered to that as well. Okay, so what sparks interest? One, a business owner that knows their business, that knows the industry, that sees opportunity, okay, and can define that and explain that well. Okay, so that's usually done in a good business plan with, again, that narrative, that presentation. And then part of that is using real numbers. Do you have the evidence to, because again, every entrepreneur is usually excitable. Yes, I'm going to go build the next, multi-million-dollar entity. Great. How? So look, this is what we've been doing. Here have been our projections, and here's what the industry is saying. Here's the growth. So when you have someone who knows the business and is excited about with realistic forecasts, that's exciting. Okay, that's okay. This is an opportunity here. So that to me is a good signal versus a red flag, which is just the opposite. That sounds a little aggressive. Seems a little unrealistic. Can you prove it? Well, no, you don't have any numbers. Okay, I see your excitement. Okay, but you're not really showing me that you understand the mechanics of your industry. What if inflation goes up or interest rates are too high and you can't get this loan? So the combination of that is what I think is what's going to make or break a deal.
No, absolutely. Pairing storytelling with numbers, critical. And I think there's one area in which we don't often talk about, and that's, the potential and strategic use of life insurance, succession planning, especially in our community. With Hispanic-owned or Latino-owned businesses, we're not having those conversations around the importance of succession planning and what that really means for the opportunity to leverage life insurance. And life insurance is often misunderstood in the business world, especially in the small business world. I'd love it for you all to can you unpack how it can be used not just for protection, but as really as a strategic asset to unlock liquidity, fund growth, and even attract talent. And I'm going to kick this question first to you, Dee Dee. Can you help us unpack that?
My favorite topic. Yeah, so life insurance is so often overlooked in terms of an asset that would be owned by a business to propel growth. So many of us just associate life insurance with death benefit protection in our individual lives, meaning, I have life insurance on my own life with my spouse and or my children being the beneficiary, but businesses can own similar policies. And it's really one of the most tax advantageous funding mechanisms for things like, deferred compensation and business succession. So when a business owns life insurance, they are also the beneficiary when the insured passes away. So all of those assets will grow tax deferred. And then the death benefit would be recognized back to the company also tax free, which is very different from like mutual funds or something like another taxable investment or asset that would be taxed on an annual basis. So life insurance that is business owned, where the business is the beneficiary, is one of the most tax advantageous funding vehicles around. So in terms of why don't they use it? Well, they're afraid that they're going to put all this money into life insurance and it's going to, they wouldn't have access to any of those monies until obviously there would be a death benefit generated. But it can, if it's a cash value life insurance policy, the business can borrow against the cash value in terms of accessing funds for expansion and emergency uses. So one of which would be, so we're not insuring things, we're insuring people. So imagine I'm a small business owner and there's someone within my company that's really instrumental to the success of my company. I want to have insurance on that person, because if that person prematurely passes away, for lack of a better word, I'm going to be in a pickle. And so I want to be able to have funds available to keep running my business and or have funds readily available to go out and recruit somebody to replace that person that's so important to my business. So that's utilizing life insurance in terms of key person insurance. It can also be used to fund a business succession plan. So many times I talk with business owners and they say, oh yeah, I've got a business succession plan in place. And they very well might, but they don't have the funding there to pull it off if someone should pass away. And then last but certainly not least, which is where I play most of my time, is in executive compensation. So life insurance is a very viable funding mechanism for things like non-qualified deferred compensation. So those kinds of arrangements allow us to recruit, retain, and reward certain people within a company that are making it really successful. So if you're looking to grow your business, or you're looking to transition your business to either maybe someone in your family or someone outside of your family, or you have somebody that's instrumental to your success, utilizing life insurance to protect those kinds of strategies is a very viable solution.
No, absolutely. Paul, any insights you'd like to share? Any examples? Please.
Yes, absolutely. Yeah. And I will take what Dee Dee said, which, good presentation from the academic side of possible uses, and of course, as an RIA, I've got to disclose, I'm not making any particular recommendation, seek financial advice from your financial advisor. But yes, those are real uses. And I say that, I'm a business owner, I have a business partner. Okay. He is vital to the success of my company. He generates income to this company that is used for the cash flow to pay our employees, to pay overhead, etc. If something were to happen to him, I'd have to figure out, one, how do I replace him? And two, how do I replace the income that he generates, okay, to be able to pay those expenses, which are some of them are short-term, payroll, paying the rent, etc. So this is where we have a buy-sell agreement in place Okay, to be able to say if something were to happen to him, I get compensated. Want to be able to buy out his wife because all of a sudden she becomes my business partner because she inherits the shares, right? So I get to be able to buy her out. She gets to value his shares value of the business. And I have cash to be able to continue running the business. So yes, that's where the liquidity becomes really important. And I'm not a doom and gloom guy. I'm a financial planner that am probably the most optimistic person you'll meet, but you have to do what's called risk management. And normally a strategy for risk management is sticking our heads in the ground and not thinking about it, but life happens. So it's nice to be able to say, if certain things happen, we're protected, we have the liquidity we need. And if not, great. You hope you never need to use your car insurance, but if something happens, you have it, right? And it's a great thing to have. So that's where insurance could be an interesting vehicle to be able to provide some of that liquidity in some of those unforeseen methods or happenings.
No, great. Thank you, Paul. And let's peel back that succession planning a little more. And so succession planning is, it's often delayed until it's too late. Paul, what's your advice to business owners who want to start preparing for a future transition, but really don't know where to begin?
I'm going to say transition. Transition can happen in one of two ways, planned or unplanned, right? Just to continue on what I just finished saying. So the unplanned is that risk management, and start thinking of the what ifs, in either scenario. What if this happened? What is it? Not to, again, make you a negative doomsday person, but I've seen several times where unforeseen circumstances have derailed the best of intentions, the best of businesses and enterprise. So think about those what ifs and how do you mitigate the risk if and when that happens. Now, let's talk about the planned, transition. Well, let's define the end. What does that transition look like? Okay. And then once you define that, what is the ideal outcome? Then you work backwards and say, okay, well, how do I get what do I need to have in place for that to happen? Okay. What type of fund am I going to have to buy someone out? Well, how do I fund that buyout? Okay. And start working successively so that you finally get to the business plan and strategy to be able to do a succession plan from the beginning.
No, absolutely. Dee Dee, any insights to share?
Yeah, couple of things. So as Paul said, you may have in your mind, like when you think you want to retire and leave the business, and many times life gets in the way and you are forced to leave the business, for different circumstances. So I think just as a matter of course, like every business owner should have a really good understanding of their business's value and really sketch out, what are my goals and objectives for moving this business? Either I'm going to sell it or I'm going to close it or I'm going to pass it on, right? So number one, assess the value of your business. So many times business owners really undervalue what their business is worth. You can get business valuations from various different people and organizations, and even Nationwide provides business valuations. So get a really good understanding of what is your business worth. Develop a plan, meaning identify somebody, or we're just going to close our doors completely if something happens, and that's fine too, but have a good strategy in place. But if you're going to transition it, who is that person? And talk to that person. Is it somebody in the family? Is it somebody that's not in the family? And do they know that they might be next in line? And do they have the skills to be able to carry this business forward and grow it? So are there things that person could be doing now to get ahead of that? I would always, advise someone to work with a financial professional, to pull something like that off. And then last but not least, like communicate that to your clients, because you have just a whole host of people who are relying on you for either goods or services. And, they may be scared, like, what if John goes out of business, or, something happens and they close their doors? Those clients want to know, what's the plan here? So I never forget, like communicate that to key stakeholders and key clients so that they know and understand what the plan is. And it makes everybody just really comfortable. And it really, I think it really bolsters your credibility even as a business owner when you do things like that.
No, absolutely, Dee Dee. And which leads me to the next question around, real world impact. And for example, in logistics, we supported a business here at the chamber that and had a conversation with a business that used a life insurance policy as part of a transition plan when one of the partners retired early. Now, it allowed the remaining team to really maintain operations, restructure their leadership, and avoid disruption. Can you share a compelling example where life insurance played a pivotal role in helping a business scale, transition, or really, solve a financial challenge?
Well, there are lots of really good stories, right? Like if you have life insurance to be able to back up the funding necessary for your business succession plan, that's easy, right? Like you have just eliminated so many challenges. What I'd like to talk about maybe in terms of compelling is the opposite. So many times I get calls where the partners thought that they had a good plan in place, but now they're realizing there wasn't either any funding or there wasn't enough funding there for the remaining partners to buy out the deceased shares of the business. And this actually happened on my team. One of our attorneys who specializes in estate planning. This is a perfect example of the cobbler's children don't have shoes, right? So she works in that space, and her husband was a business owner, and one of his partners died prematurely, and they did not have the funding in place for everybody to buy out the shares. So what he found was he was then in business with his partner's spouse, who knew nothing about the business and was forced to be in business with that person, for until they could actually, pull off another arrangement. And I can't think of anything worse than having to go through and the grieving process of, you're just killing it, and then your business partner passes away prematurely. So your business is negatively impacted because that person is obviously instrumental to the success and viability of the business. And you're grieving because you just lost your best friend or, whoever, your partner in crime. And now you're in business with their spouse or, whoever. So, you want to make sure that you've got a good plan in place and that you have the appropriate funding to be able to buy out the shares when push comes to shove. And life insurance is very, advantageous in that regard, but it could be other assets. Like, every buy sell transaction is very different. So, and I realize you get money from different places, but know what that is and make sure that there's enough there and have a good business valuation. Know what that business is worth on an annual basis and know what it's going to take to pull off buying out somebody out of that business.
No, absolutely. And Paul, any examples where life insurance played a pivotal role in helping businesses scale, transition?
Well, yes, I have plenty of examples, but I want to piggyback off Dee Dee's example, of a partnership that happened, and we've mentioned buy sell a few times, and I want to use that to roll in a question that was asked here, that I saw was asked about the Connolly decision, that was asked by Elias Corpas. Thank you for the question. We appreciate that. How that affects buy sells. That was a decision that happened last year, that basically said that insurance owned by the company could be rolled into the valuation of the estate, creating maybe a little less liquidity and more taxes, etc. And that this goes back to what Nick was saying. And what Dee Dee was saying, you need a good tax consultant, a good estate, these professionals surrounding you, one, who are aware of these decisions because they're real. Okay, they have a real impact, and two, can help you plan ahead of time. Okay, not oops, surprise, mea culpa. No, it's you're taking it by the bull by the horn and saying, okay, well, if this is in place, do you have a buy-sell agreement? If you do, what type of buy-sell? Is it a corporately owned, entity cross purchase, or is it a individual owned? Like I said, I have one with my business. I own life insurance on him. Different issue, not affected by the Connolly decision. Okay, so these are real situations where I've had clients who have passed away, and it was husband and wife team. He passed away, young Latino who would play soccer 3 times a week. But when they finally got insurance, he passed away of a heart attack, and she was so devastated she couldn't run the business. The insurance that she had was able to fund her payroll, keep the business alive until she was able to be back in an emotional state. So it is important that you have something, but all that comes to planning and with advisors and planners who can stay on top of the laws, such as the county decision, to make sure that you're structuring in the right way.
No,
Yeah, and
absolutely.
Cynthia, if I could just piggyback
Please.
off of Paul just 1 second, because it reminded me of something as well. So, Paul brings up the Connolly decision, which went all the way up to the Supreme Court. So small business owners not only have, litigation that's changing the landscape out there, but we're also, on the on the cusp of some really large tax changes through the One Big Beautiful Bill Act, allegedly coming back to us July 4th weekend, which they always put forth, this really big package of legislation always on a holiday. So I fully expect it to come back that weekend just for that sheer fact. But I don't want to get into the nuts and bolts of that legislation because it's very large. It's 1,100 plus pages, and there will be, you can know that for certain, that there will be large implications to businesses of all sizes, S corporations, C corporations, LLCs, etc. So if we've said it once, we've said it a couple times now, all three of us, Nick, Paul, and I. You can't stay, like, it's hard for practitioners and experts to stay ahead of that stuff. So as a business owner, it would be just impossible for you to stay, on to all of those kinds of provisions. So again, stay close to your tax counsel or your accountant, because that's that person's job, is to get on that One Big Beautiful Bill Act and know the implications that impact small businesses and estate planning changes, which will be obviously, impactful to business owners, the estate tax planning provisions, but, really get ahead of those things because you don't want to lose deductions and things like that because you're just too late to the party.
No, absolutely. Yeah, stay close to your accountant, cultivate your relationship with your banker, critical.
Yeah.
Thank you, Paul, and thank you, Dee Dee. And, we've covered some very essential building blocks from access to capital to long-term planning. But, this will not come as a surprise, but there's another game changer that we really want to talk about, and that's technology. And artificial intelligence isn't just reshaping how large corporations operate. It's also opening new doors for small businesses to manage, their finances more efficiently, make smarter decisions, and even stand out to potential investors. So let's shift gears and dive into how AI is changing the landscape for small business finance. And Nick, so AI, is reshaping how businesses operate, but it's also changing how they plan. How can small business owners really leverage AI to improve forecasting, streamline financial planning, and even enhance their appeal to investors?
Yep. Again, let's get super tactical here, right? And so I think about the opportunity is to bring on a new thought partner and source of strategic insight through AI. And so as a small business owner that's thinking about scaling with capital, one of the first things I want to do is through OpenAI's ChatGPT, I want to create a custom GPT. So for those of you that have ChatGPT accounts, on the left-hand panel, there's a section that says GPTs. And when you click on it, a whole world of GPTs created by others opens up. But in that realm, you can also create your own. And so here's what's powerful about creating your own GPT. You can establish your own set of instructions. They're called system prompts, in which we can create basically an AI, a CFO for our business. And so we're giving it information, we're giving it the context about our small business, right? We're establishing our goals and objectives, what we want to achieve financially as context. The next thing I'm going to do is once I save that, and that's unique to me, it could be private, Then I'm actually going to upload my financials and I'm going to have a conversation with my AI CFO. And specifically what I'm doing, and I love this move, I ask it to ask me 10 questions about the financials that I just uploaded, right? Because I know my business, but I don't necessarily know it as like a CFO, at a major publicly traded company. So I'm not going to tell the story that we've been talking about today in a crisp way. Well, this is a really powerful way to get that out. So the AI will ask you 10 questions about your financial data. And then here's what's awesome. After you tell the AI the answers to those questions, then you say, hey, can you please craft the narrative? So the AI will construct the narrative around your financial performance. I love doing this every single month. Take your financial package that you get at the end of the month, right? This is your P&L, your balance sheet, your statement of cash flows. Upload that to your AI CFO custom GPT, and then get a narrative and attach the narrative to your monthly financials. Step one. Step two, I'm going to create another GPT that's my funder GPT, right? And I'm going to set the context with a system prompt to the funder. It could be a commercial banker, it could be private equity. I'm giving that AI the checklist of the funder, right? And then I'm going back to the AI, and this time I'm taking all of my nice monthly packages from before where I have my beautiful narrative associated with it, all my financials. And I'm now going to my funder AI custom GPT, and I'm saying, hey, give me a look. What do you think? Would I pass the test? Act like a credit committee, act like a funding committee, and give me honest, candid feedback about my package. And if for whatever reason you don't fund me, tell me why, and give me 5 specific things that I can do over the next 6 months to improve my chances of getting funded, right? These are really specific things that can be accomplished in a day, Cynthia. Today it could be done, and you don't need to have a dev on your team. You don't need to be a programmer. You just need to know your business. And that's a game changer for a lot of our small businesses.
Yeah, no, absolutely. I mean, Nick, it's clear that AI isn't just about automation. It's really becoming a decision-making partner for small businesses. And I'm sure you've seen entrepreneurs using, these AI-powered tools. You mentioned CFO platforms, and they really act like a virtual finance team that, flag risk, forecasting, cash flow. And so that, that brings us to our next question. With so many tools out there, so many, what are some of those AI-driven platforms or technologies that you would recommend for business owners that are really looking to sharpen their financial edge? And what are some of the tools that you're using in particular?
Yes. Yeah, great question. I think it all starts with a knowledge base. So think of a knowledge base as the repository of all the stuff that your company knows. Now, today, what's your knowledge base look like? It's probably in some emails. Maybe you have, if you're on Google, you have some docs spread across your different accounts. Maybe you have a shared drive. Some of us are in Dropbox or Box. And in some cases, those things are really rigorously organized. And in some cases, they're not. I think many entrepreneurs know what I'm talking about. Maybe the files are not necessarily in the right folder all the time, or they're a little chaotic. Step one is actually to organize the information that we have. Like, forget about the AI's intelligence for a moment. We got to organize our own house. Let's get it in the right folders. It's called a knowledge base. You can do it in tools like Notion and other things that you're already in today. So that's step one. Make sure that your data is all centralized and you have good visibility. Then you can link it. I mean, some of the major LLMs, large language models today, like ChatGPT, like Claude from Anthropic, like Gemini from Google, they now have introduced the ability to link like your Google Drive, link your Dropbox, link your Box, your company repositories to these AI models. And that's a game changer because now you and your team, and there's a lot of gating and security protections behind this, but the opportunity is now you and your team can interact with that massive repository, all those proposals, all those client agreements, all that data now becomes unlocked and paired with the AI's intelligence. In terms of other specific tools, there's a lot of talk about agents, and I think we really need to lean into that. I think the future of agents is around voice agents. So today we're interacting with AI and a lot of us are typing things. You do have the ability to speak in natural language. I think the future, I would imagine 12 months from now, instead of us typing to this ChatGPT or Gemini, we're talking. Right? And that becomes the normal mode. And so imagine you as a business owner, your team is building these agents where you're getting things done with natural voice. So instead of teams having to go fill out forms or paperwork, we're just having a conversation to get work done. A tool that I love there is called Voice Flow. And one of the things to think about in all of this stuff that we're talking about is the prompt or the instructions. I alluded to that previously. The instructions matter a lot. So it's not just like a Google search. It's a little bit more robust and sophisticated than that. There's a really awesome tool called Prometheus. Say that 10 times. So Prometheus is an awesome tool because it really structures these prompts to create super high level system prompts that unlock a lot of the things that we're talking about. And then the last one that I'll give you is Vercel. You may have heard about vibe coding. This is super fun. Cynthia, your 26th hour of the day, you got to check this out. You go there, you give it an idea, you give it about the chamber, some small thing, and it actually will code it. And you can deploy it live. And you can vibe code really cool tools for yourself in relatively short periods of time. So those are just a handful. I have a list. I can share it with you guys afterwards.
Please do. I mean, Nick, I mean, those recommendations are incredibly helpful, especially for small business owners who may not know where to start. I mean, as I mentioned, there's so many options, and we've seen that once a business gets comfortable with just one AI-driven tool, whether it's for bookkeeping or cash flow modeling or even funding research, it really builds that confidence to adopt more and explore other tools. And we've heard from members who were hesitant at first, but after implementing tools like you mentioned, they not only gained better financial visibility, but we're also able to communicate more effectively with lenders, clients, and even those procurement officers that we work with on a daily basis. And it really highlights that AI isn't just a tech trend; it's really becoming a foundational part of our financial strategy, business planning, etc. So thank you for sharing those insights. And I think, but before we move on to any final reflections, I think we have some questions that I'd like to ask in the chat. And it looks like, so we did answer a question from Elias, and the next question is, and we may have covered this, but I'm going to answer it anyway. I want to make sure that we address any questions in the chat. And that question is, what practical steps can I take to become more investor ready? And how can I start thinking like the people who control the capital? Who wants to take that one on?
I mean, after Nick's presentation, do exactly what he said.
Right.
Right.
Absolutely.
I mean, that to me, that's a no-brainer. Once he puts it like that, obviously there's probably a learning curve and a comfort level of that. But if these AI models can help us actually see how we think like them, because we're not all wired the same. Again, that EMIS shows a different wiring of different mechanics in a business. And we have to understand that various wirings are necessary for growth, but you need to understand all of them, even though you aren't all of them. So I want to echo what Nick said. I think that's powerful to be able to do that. But also, as we talked earlier, is really understanding the audience, understanding what they're looking for, and having a great grasp of what that means and how that translates into your particular business, and knowing how to present that in a good way. Have a good bit. Cynthia, you've mentioned the business plan several times. I don't like the traditional business plan. Oh, here's this 50-page document that sits there, and it's a cute exercise that takes 3 months to prepare, and then it gets dust. It's not about that. I mean, you can do a one-pager these days. You've probably heard that, that one-page business plan, but it's about using a tool such as that helps you, one, get a better grasp of the different dimensions of your business and the ability to present it well because you have that tool.
No, absolutely. Another question from Elias Corpas. He says, on the topic of buy-sell, how important is it to plan for disability and incapacity in the terms of long-term care? And do you see these as triggering events that are typically overlooked outside of just life insurance?
I can add some commentary there. So, statistically speaking, you won't die tomorrow. but statistically speaking, you may get hurt or injured. And what I mean by that is, life insurance is fabulous, right? But it does provide for a death benefit. I think it's really important for business owners who are going through the process of underwriting for life insurance, whether it's a term policy or, variable universal life. You should always entertain long-term care planning at that point in time. And the goal of any and all of that is to get on that earlier than later. And what I mean by that is you are more insurable, and the cost of insurance is so much less when you are healthy and when you are young. So if you wait too long, it's going to be expensive. And so the goal is to, if you're going to entertain life insurance, you should obviously entertain long-term care planning, which is usually it can be, you can get standalone long-term care, or you can get long-term care that's also associated as a rider with just regular vanilla life insurance, depending on what you're looking for and all those kinds of things. But yes, I think long-term care planning is very important just from a sheer numbers perspective. The possibility of you getting injured and not being able to work and run your business daily is a lot higher than you just getting hit by a bus tomorrow.
No, absolutely. Thank you so much, Dee Dee. And
Welcome.
one last question regarding some of the AI tools, Nick, that you shared. Do any of those tools have mobile applications, or are they only desktop versions?
Yeah, great question. A lot of the chat-based LLMs like ChatGPT, Claude, Gemini, they all have mobile apps, highly recommended, because they all have now the voice feature and access to, you can turn on access to your camera and show them your world, and they can provide you feedback, which is super cool. The ones that are more along the lines of developing agents like VoiceFlow, or that are more along the lines of systemic prompts like Prometheus or Vercel, those are all desktop applications.
Okay, great. Thank you very much. Hopefully in the future we'll see mobile applications. But with that, I would love it if you could, all of you, give one piece of financial advice to a small business owner who's preparing for growth in the next 12 months. What would it be, and why? And I think I'll start with Dee Dee.
Yeah, sure. Gosh, well, I'm not in the business of giving financial advice. I want to be clear. I'm not giving financial advice here. But if we were just best friends sitting for coffee and you said, gosh, what's one thing I could do? I think I'm going to stick with a theme that we've seen throughout the hour, and that is, don't do this alone. Like, you're really good at running your business. So pull in other experts to help you navigate. But let's get tactical. If you don't have capacity or time or mental bandwidth to do anything, I would say tactically, like, prioritize your cash flow management. Like, start there fundamentally. That's going to, making sure that you're covering, your day-to-day expenses and your payroll and utilities and all those good things. And knowing and understanding that allows you to make really good informed decisions. It helps you weather ups and downs in economies and markets and, social, political climate and things like that. But then it also helps you tell your story really well. So consistent cash flow management, it's going to improve your business's health. It's going to make you attractive to lenders, and it's going to help you tell your story really well to people that you need to tell your story. So if you just can't do anything else, start right there.
That's great. That's great. Paul, any reflections, insights?
Yes, absolutely. Parlaying off what Dee Dee said, cash flow management is key. We talked about that in the beginning, as a blind spot, and wrap up with that. But taking that and parlaying that into, well, what does that mean once you get an understanding? I mentioned earlier today, I heard a quote years ago. It said, I can't control the global economy, but I can control my economy. Right.
Mhm.
So that's really important, that we can either focus on what you can control or make, moves forward on what you can, and, see how the rest of the world supports that. But when you have an understanding of your financials, your cash flow, your financial metrics, and then you can deploy that appropriately by understanding this mindset of growth that requires you to know the difference between an expense, or an investment. That ties into everything we just finished mentioning. When you say, oh, bring these professionals around. Well, if I've got to hire an attorney and I've got to hire an IT guy, or I have to, is that an expense or is that an investment? If I have to pay for some software, is that an expense or is that an investment? The question is, can I afford to do that? Well, is the question that, or can the question be, can I afford not to do that? So I think it's changing that mindset to be able to take these practical realities of understanding your financial statements and then using that philosophically but practically to deploy resources in a world that you can only control, obviously taking into account external factors via the professionals who can help you do that.
No, absolutely. Nick, one piece of financial advice for small business owners preparing for growth?
Yeah, I would say let's level up and add company valuation to your list of KPIs. You should know, we talked a lot about this asset that you run and all these strategies. You should know what the thing is worth and you should track it. And so if you're running this business right now and you don't know what it's worth, you should. Christian shared a calculator in there. Get eyes on the number. It's extremely motivating when you know what your baby is worth, because 9 times out of 10, at least in my experience, once you know what it's worth, guess what they want to do, Cynthia? They want to increase the value of the baby, right? And then all this stuff really comes into context. And then I would pair that with one other question. Once you know the value of your baby, what could you build if intelligence was not a barrier? What could you build if intelligence was not a barrier? Because we now live in an environment where intelligence increasingly will not be a barrier. So these are very exciting times to increase the valuation of all these businesses.
No, absolutely. And thank you so much to our incredible panelists for your time, insights, and practical advice. Your expertise has really helped to demystify some of the most critical aspects of financial strategy for small business growth, from funding readiness and succession planning to the role of AI and digital tools. And to everyone who joined us today, thank you for being part of the conversation. Thank you to our partners at Nationwide, at the United States Hispanic Chamber of Commerce. We remain committed to empowering small and Hispanic-owned businesses with the knowledge and connections and those resources that you need to thrive. And if you missed anything or want to revisit part of today's discussion, the full recording will be available soon. And as always, we invite you to stay connected with us through our upcoming webinars, our national conference in September in Atlanta, Georgia, all of our events and business support programs. Thank you again, and I wish you all a great day. Okay, we're good. Thank you all. Great conversation. We ended 2 minutes early.
Woohoo.
Right on time.
Yeah, thank you.
Thank you, Cynthia. Great job.
Great job, team.
Awesome. Until next time. And thank you, Nationwide.
Yeah, thank you. See y'all later.
Take care.
Bye, everyone.
Bye-bye.